Today, I want to talk about how there's more retail investors than ever currently trading the markets and holding stocks like AMC. I want to explain why this is super important for the squeeze, and also explain how a wave of hedge fund collapses could be about to happen. So stay tuned and let's make some money. As a quick side note, I know it's the same day, but I thought I'd change it up and go for another silly Christmas hat. This one's a Christmas pudding that says Merry Christmas. And now I'll dive straight in with the key information. So, Dave Lauer tweeted saying a great piece in the WSJ today about equity ownership in the United States, saying individual investors and households have a larger allocation to stocks than ever before and are a bigger presence in the markets. He said, "You thought 2021 was the peak for owning directly held stocks? Think again." And he said it's time for individual investors to exercise their collective power. You can see here in 2022 and 2023, there's a new record high for the percentage of US households holding stocks. It's up from 52-53%, now much closer to 58-59-60%. And you can also see there's a significant increase in those directly holding stocks, similar to the 2000 levels. And many of those are also holding more shares in their retirement accounts too. But so why is it really important for the squeeze to have more retail investors holding shares of companies like AMC? Well, obviously the shills have been trying to tell us that many people have sold out, many people have gone elsewhere and stopped investing altogether, which, from the data and the facts, is simply not the case. And it's because also in my video earlier, Charles Gasparino said something very, very important, which also proves not to be true. Charles Gasparino said in that interview that these coming short squeezes will not be the same as the squeezes in 2021. He said the reason why is because in 2020 and 2021, because of the pandemic, tons of people were investing in stocks, in meme stocks and all stocks across the board. He said that was a once-in-a-lifetime opportunity or a once-in-a-lifetime event, and those conditions are not reoccurring. Charles Gasparino is basically saying these coming short squeezes will not be the same because there's less retail investors. He was saying people have gone back to work, they've stopped investing, and therefore there's not the same retail presence in the market to cause these massive squeezes. Which, as Dave Lauer in this data clearly points out, that is absolutely not the case. If anything, there's now more retail investors right now in 2023 than there was in 2021. And that's literally confirmed by Dave Lauer as well, saying you thought 2021 was the peak for owning directly held stocks by retail investors. Think again. So that just gives even more power to these coming squeezes than we saw in 2021, as there's more retail investors. So once again, Charles Gasparino is absolutely incorrect, and these coming squeezes will indeed be on steroids and even bigger than 2021. Now, something I also think would be super interesting to know is how many exact retail investors still remain holding AMC. Adam Aaron previously told us it was 4 million retail investors. He then gave us an update at 3.8 million. I've asked AMC's investor relations team, and I advise or request you to maybe do the same to speed up the results, but to ask once again, as of now, today, post reverse split, how many retail investing shareholders hold AMC shares? Is it 3.8 million? Is it 4 million? Is it even more? Or is it maybe slightly less? I think that'd be really, really interesting to know, because it would really show once and for all that retail investors are not leaving. I also want to explain how many in the group today locked in $600, $1,000 or even more in just one day of trading. That covers not just a month of membership to the group, but the entire lifetime membership in just one day. You can see here Ross locked in 36% gains on our fast moving momentum news play. Kevin locked in $1,000 and Lala Solara locked in $600 in just one singular day of trading. So let's go through that fast moving momentum news play today, CUEN. You can see here in the pre-market, I said that CUEN is one to watch. The entry price target is $1.83 per share. And I even told the team to set an alert in your trading platform for $1.83. That's obviously what Ross did, because when the market opened, it ran over that $1.83 level and continued pushing all the way over $2.90 for a 61% gain in just one singular day. So guys, if you want to be making hundreds if not thousands of dollars every single day, be sure to join the Millionaire Mindset Trading Group linked in the description below. Now, Biotech Moose also replied to my tweet or my post saying when financial media sock puppets like Liz Clayman and Charles Gasparino are discussing a short squeeze on steroids, somebody big is very worried. He said these shorts are finally realizing they cannot stop the inevitable, they can only delay it. Now, I do agree it's very possible or very likely that many of these shorts are indeed worried about these short squeezes on steroids, and I actually want to explain who's potentially likely to kick off this wave of hedge fund collapses. But I did also first want to point out this could also be a potential bait to try and convince retail investors like you and I to buy call options. Again, we know these market makers, these hedge funds and these shorts try and bait us into buying call options to then push the price down, effectively ensuring that our premiums and our option purchases expire worthless. Something I always preach about in the Millionaire Mindset Trading Group is to first wait until we have confirmation before buying a stock or an option. Therefore, I wouldn't be buying AMC call options until we have some kind of confirmation that the squeeze is actually starting. To me, that kind of confirmation would be seeing the price running upwards past $10, $20, $30, $40, $50, maybe even higher. Only then is the squeeze actually starting. Until then, these articles and these interviews are just noise because there's no specific dates being mentioned for a guaranteed squeeze date. We know it will happen. We know even Charles Gasparino is talking about short squeezes on steroids, but we can't predict a specific date like today, tomorrow, next week, next month, or in 2 or 3 months' time, for example. But Justario has tweeted today asking if Andand hedge fund is still breathing. Now, so Andand, I mentioned in one of my videos the other day, which is one of these hedge funds that's down massively in 2023. Back in January, they were down 20% from their short positions. In March, that increased to 40%, and now in December, that's increased to a massive 54% loss. As Biotech Moose tweeted, he said Andand is shorting oil and other stocks, and they've taken massive losses in 2023 so far, which is indicative of the broader effect to short sellers and their short selling networks. And he said indeed a domino effect on short sellers, specifically of AMC, but short sellers market-wide is indeed possible if Andand collapses. Now, why is that the case? Well, obviously when Andand collapses, they have to close out of all of their short positions, close out of their shorts in oil, and close out of their shorts in all other stocks too. And actually what we're seeing today specifically is actually a massive spike in the price of oil, especially over the last couple of hours. You can see oil is now trading at $74 and this morning was trading for only $71. Yes, you may say, Tom, that's a fairly small increase, just 3, 4 or 5%, but let's also remember it's likely that Andand's position is very heavily leveraged. So that 3% movement or that 5% movement, which is actually a pretty big movement for oil specifically, could cause them to lose another 10, 15 or 20% of their portfolio. And if it is causing margin calls, this could effectively be their short position being closed out of. We all know these shorts are going to try and save their AMC short positions to be the last shorts they close out of. First, closing out of oil shorts, big blue chip tech shorts, small cap shorts, and heavily shorted name shorts before those meme stock shorts. Those will be the last to be closed out of, but also have the largest impact to AMC and GameStop's stock prices. So therefore, when Andand collapses and is forced to close out of all of their other short positions, it pushes the prices up in all of these stocks, causing even more stress to other short sellers, effectively causing a feedback loop of more collapses, more price rises, more stress and more collapses. Now, what's interesting is that Boss Blunts has also spoken about the RSI on the S&P 500 and the Dow Jones being the most overbought in history. Yes, I do believe we're currently in a massive bubble with the market setting new all-time highs and with the RSI so high. But remember, the more shorts that are being liquidated pushes the market up even higher. So this RSI will continue being overbought and continue getting even more overbought, with more short hedge funds being liquidated, being stressed, being forced to close out of positions and going under. As Sven tweeted, he said they couldn't even get the Dow Jones RSI anywhere near 85 in 2019 with 3 rate cuts and balance sheet expansion, or during post-pandemic with 0 rates and $120 billion a month in quantitative easing. But now when the market isn't even sure if we're going to achieve a soft landing or a massive recession, the market is setting new all-time highs and has a higher RSI than ever seen before. But as I said, the more we're seeing these shorts being squeezed, the more we'll also see the market being squeezed upwards as well. As I've said, yes, we're in a bubble. Yes, the market is overbought. Yes, a crash is coming. But the most key thing out of all of this is to wait for confirmation. It's no good buying puts in October, buying puts in November, and buying puts in December while the market is running up and up and up. What we need to wait for as a sign the crash is starting is for the market to stop moving upwards and start moving downwards past those September-October lows. As I've always said, the real key aim of the game is confirmation, confirmation, confirmation. Now finally, Rattoy tweeted an excellent screenshot or an excellent poster about the Whistleblower Program, asking if anyone out there has been paid to post misinformation about AMC or any other meme stocks. The SEC has a whistleblower program, saying there's millions of dollars in rewards for anyone that has information about being paid to post FUD. And as Cristobal added, he said, if you don't trust the SEC, tell us, aka those in the meme stock community spreading the word, and we'll make sure the world knows without blowing your cover. Saying there must be someone with motive to spill the beans, maybe someone who got let go by one of the big funds and wants to help take them down. I'm sure many of these employees that do have access to that kind of information have had to sign non-disclosure agreements, but I'm sure there's also rules and regulations about going to the SEC even if you have signed an NDA. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.